and good morning, everyone. I'm Chanelle Smith, as you all are familiar with if you've been here before. I'm the founder and executive director of TSK Wealth Planners. My major is in finance. My background is in finance. I'm accredited here teaching you guys today. I have 2 degrees in financial management, first from Sheridan, then from Guelph Humber. I've worked in roles that span from management, consulting, facilitation, PR, and more. My background is in investments, market securities, financial management, and business development. And I invest personally in the stock market and other financial products, pre-construction real estate as well. And now I run TSK Wealth Planners, which is my nonprofit organization that provides free financial literacy for marginalized and underserved communities. So welcome to everyone. Good morning. And welcome to BBPA's community space for financial basics for entrepreneurs. As I said previously, my name is Chanelle Smith, and I am excited to be your guide this week through this journey into session number 2, which is financial statements and analysis. So can everyone please just put their first name in the chat for me quickly? Let's get warmed up. Let me see who's active, participating, engaging with me this morning. If I could just get everyone to put your first name in the chat, that would be helpful. Stephanie, awesome. Good morning. I see you. Sandria, good morning. Good morning. Moy, okay. Michelle, awesome. Great. So we're going to start with the dynamics of financial statements. So as we venture into the intricacies of financial statements, imagine the financial ecosystem of the business. So it's kind of like a choreographed dance where every move influences the other. And we talked a little bit about this last week. Can anyone give me some insights on how a person, a business owner, an individual would comprehend a balance sheet and impact statement? Does anyone have any insights on that? How would you guys interpret a balance sheet and an income statement? So we touched on this a little bit last week, and I promised you guys this week we were going to dive more into it, being that our topic is financial statements. So the question is, can anyone give me some insight into how they read or interpret their financial statement? So balance sheet or income statement. And if you want, you can come off of mute as well. I know a lot of people are still joining. If you want, you can come off mute. Tell me about your interactions, experiences with balance sheet and income statement. Don't worry about interrupting me. Hi, Andrew. Okay, great. So I'll tell you guys, you want to remember the balance sheet is kind of like a snapshot of your business's financial position at a specific moment. So it regularly helps you to interpret and provide like valuable insights to how healthy your company is. So that is your balance sheet is your assets and your liabilities, right? So that gives you a good, yeah, you can go ahead and unmute. Sorry. Yeah, if we can even just give everybody the ability to unmute their mic on their own, that would be great as well. Thank you, ladies. Right? So you've got your assets, you've got your liabilities. I want some participation here. Can someone tell me what an asset is? We went over this last week.
This is Sandria here. An asset is the items that the company owns.
Okay.
And use in the business to earn income.
Okay, that's the important piece. Assets are typically income generating or appreciating, especially when it comes to business. Personally, sometimes we consider depreciating assets and sometimes in business as well, but majority of the time we want to look on the side of income producing or appreciating, right? So an asset is essentially like Sandria just said to us. Thank you, Sandria. It is anything that the business owns. Typically, it's larger. So things like property, plant, and equipment. That could be, again, a property, a building, an office, whatever the case may be. Plant is usually like land. That kind of stuff is more in manufacturing industry. And then equipment, which is anything useful products or more expensive capital products you use to conduct business. And then can someone give me some insight on what a liability is? What is a liability? I'll give you guys a second. I know it takes a second. Feel free to come off of mute. Type if you want to type in the chat as well. That's fine. Can anyone tell me what a liability is? Debts. Okay, a debt is a form of a liability. Yeah. Yeah, and I can expand on that. So thank you, Lolita. And Sindri again, balances for that period. Liability are items the company owes. So what you owe, right? That's the simple way. What you owe, and debts falls under that as well. Also, too, liability has to do with obligation. So if you are taking notes, or if you wanted to know the two key points there, liabilities have to do with what you owe and your obligations. So if there's anything that you're obliged to pay, then that could be considered a liability as well. You're liable for it. Okay, so that's our balance statement. It gives us our assets versus our liabilities. And in that sense, typically that'll give you the cup similar to an individual, that'll give you the company's net worth, right? So when analyzing income statements, does anyone know what an income statement is? Can someone tell me what an income statement is? Let's have a bit of a conversation. Someone let me know what an income statement is. I'll give you guys a few seconds. And you can cheat as well.
That you receive.
Sorry, what was that? And can I get your name?
This is Najee from Harmony Development. Revenues that you receive.
Okay. Yeah, your income statement does have your revenues, right? So income statement, revenues against expenses. So typically, as we could see, financial statements are usually you have the plus and you have the negative, right? You have up and you have down. You have one side versus the other side. So your income statement is showing you your revenues, as you said. Thank you, Naja, versus your expenses. So what is a revenue? Can you tell us that? What's a revenue? Business terminology. These are terms that as a business owner, we probably have tons of small business owners in the chat. These are terms that we want to know. By the end of our sessions, we want to have these terms frequent in our vocabulary. So what's a revenue?
Your sales.
Sales, yeah. Sales are a revenue. Yeah. That's yeah.
Income.
Mm-hmm. Income, sales, income. Profits. That's where your profits come from. So your revenue is your sales and your income from a business. So that could be sales typically in retail or with products. Exactly. Money generated. So these are key terms. So I agree. Sales, income, money generated. Key points of revenue, right? So whatever it is that your business does, maybe it's not sales because you don't have products and you're not in retail. Maybe you're in the service industry, right? So your revenue is going to be your income from providing services, from services provided. That's revenue. And then let's go to expenses. Somebody tell me what an expense is and maybe give me an example of an expense. Because if, let's say, for example, another critical part of business, if a debt, like a bank loan, is a liability, so that's an offset to an asset, then give me an example of what an expense could be. What is an expense? So if a bank loan, yeah, go ahead.
Telephone or office, a period generated outflow of money that you have to
Okay.
pay. So like for example, you have to pay for your telephone, or you pay for office, or you pay for um, bank charges. Those are expenses.
Exactly. So thank you. I think that was Sindria. Is that right?
Yes, that is correct.
Okay, awesome. Thank you so much for contributing that. So she hit the nail right on the head, right? So those are things recurring, typically, recurring periodically as well. And they're obligations and they help the operation of the business. So if that's a phone bill, if that's utilities, sometimes utilities can be a liability as well, but often with expenses and liabilities, those are the tricky parts of accounting and of reading financial statements. So for example, if you have a debt, your debt is going to be a liability like a bank loan. But if you have an interest is an expense. Okay, so that's just a main example, a major example I keep in my head when it comes to interpreting, understanding financial statements, separating assets, liabilities, and revenues and expenses, and being able to categorize those things so that you could stay organized and analyze your business. You definitely want to be able to practice, where does this go? Where does that go? What's the difference between liability and expense, right? And you guys could jump in if you have any questions for me or you need any clarity. come off mute, feel free to jump in. We have a nice intimate group today, so we're good to do that. Or you can type in the chat if you're comfortable. So let's spotlight what we would consider. Obviously, we know so far we consider the financial statements the heartbeat, right? That's what we talked about, the heartbeat of any business. How do you currently leverage financial statements like your balance sheet and your income statement? So to rephrase that question, how are these statements good for us in business? How are financial statements beneficial in business? So this is where our conversation kind of starts. You guys let me know, what are the benefits of being able to produce and interpret financial statements in business? I'll give you guys a second to answer there. What would you say your difficulties are in terms of being able to produce? So that means create or understand or interpret financial statements. And you guys can come off mute if you want, or you can go ahead and type in the chat. So when addressing, let's say, a balance sheet, for example, they say you want to pay attention to the liquidity of your assets. So this goes to the reason that financial statements are useful, right? Can we talk about liquidity? Does anyone know what liquidity is? And don't feel free if you might get it wrong, you might get it wrong.
Liquidity is the ability of your company to pay off current liability, or you're doing it over.
Close. Yeah, close. It speaks to that. Liquidity does speak to that. So like capacity to pay is definitely that's a little bit more on the credit side. So that is a characteristic of credit, but it still has similar ramifications. So it essentially just it's not necessarily your capacity to pay, but your capacity to cover your expenses, right? So your capacity to cover what your business is worth. So let's say I've got obligations. So that's not only to pay bills and that kind of stuff. That could be to pay suppliers, etc. Yeah, how quickly you can turn. Yeah. So you can turn your assets into cash, right? So that's being able to draw on money for whatever purpose you need it for. If let's say you have shareholders that you need to pay out or stakeholders in your business, do you have the tools? So is that stocks? Is the money invested somewhere offshore that it's going to take 2 weeks to get to? That is not liquid. If you have market securities or if you have savings or funds in your business, those things are liquid and those are assets. Market securities. So let me ask you guys a quick question. Is real estate, if you have a business and you have a fixed asset like real estate, is that liquid or is that not very liquid?
Not very liquid.
And who gave me that answer?
I did.
Is that Anam?
Yes.
Awesome. Thanks, Anam. And who are you? What do you do? And how is this webinar beneficial to you right now, Anam? What industry are you in?
Well, entrepreneur education. It's important. I work within the school board, so financial literacy is important. Actually, I've been on this webinar for nearly 4 years now.
Awesome.
But I try to get our communities involved in financial literacy because poverty is not a good thing. So,
exactly.
So that's why I'm here.
Definitely. Thank you for that. And I agree. Poverty is not a good thing. And we definitely have the ramifications and the ability to evade that and to stay out of that if we continue with spaces like this, right? So thank you to the BBPA. So as we were talking about liquidity, okay? So oftentimes small business owners don't think that liquidity is something that is important. If you're looking to expand or grow your business, you don't want to only focus on revenue, your regular operating activities. So that has to do with like your inventory if you sell products. So they say inventory is the most liquid asset you can have in a business, right? It's directly sale for cash. That's the understanding. However, what we understand from the big players that are successful in generating business, these companies, Apple, Amazon, and as a small business owner, you don't have to aspire to be that, but you still want to learn key habits from those players, right? One of the major things is that to generate revenue and to generate income, you want to make sure you have multiple activities. how do you have different activities besides just your product and your sales? You have to purchase or acquire for your business income producing assets. And that's how, once you acquire those things, you get into liquidity. And if those assets are liquid enough that you can turn to them for a rainy day, sell off a few market securities, is that liquid? If you have an asset like a property or something like that, maybe you have to borrow against it. It's not as liquid, right? So these are things that a balance sheet helps us to understand: balance sheet, income statement, the financial position of our company. Okay. So are there any questions kind of on that area? I'm going to move along a little bit. If you guys have any questions, be sure
Yeah,
to,
Chanelle.
yeah, go ahead.
Hi,
Yeah.
this is Andrew.
Hey,
I
Andrew.
guess one of the most overlooked liquid assets is your receivables,
For
because
sure.
it's great that we have sales, but actually going after, making sure that your clients pay you. And sometimes we have a lot of sales, receivables grow, but we don't work on making sure that you get paid on time. So
Precisely.
important.
Yeah. No, thank you for that. And thank you for mentioning that. Exactly. Just like Andrew said, to just elaborate on that a little bit, your receivables, right? So that is an account, they could say that we consider like it's an asset account to a company, because it's money owed to the company for services or products already rendered, already provided, right? So essentially what Andrew's helping us understand is, you don't want to have money just out there. You don't want to have customers just owing you, because that's money that belongs to your business, belongs to you. And to be honest with you, as he mentioned, a lot of the bigger players, a huge chunk of even their retained profits goes towards the act of collecting those receivables. So definitely, as a business owner, you want to close your invoices quickly. It's a highly analyzed financial ratio, receivable turnover. So what they call that is how long it takes to collect on your receivables. So I'm glad Andrew mentioned that. You definitely lose money on the dime by not collecting money as quickly as you can, right? So you definitely, that asset is a valuable asset. Thanks, Andrew. So next up, we are crafting the financial narrative. So as we navigate financial statements, consider budgeting as a potent tool for yourselves as entrepreneurs. So I will start first, but in the meantime, I want you guys to think of a quick tip or trick that you use for your business budgeting. It could be general, it could be anything. I'm going to start first, but think of a quick tip that you would give the audience, or you would give to yourself at the beginning of your entrepreneurial journey in regards to business and business budgeting, specifically about business budgeting. Okay, so as I said, I'll start first. My major tip is to budget, right? So typically, two things happen for business owners. They get into business, especially small business, sole proprietorships specifically, just because of the structure. They get in, they don't budget. And either they're making a lot of money, so they assume they begin to look at it as an endless resource, or they're not making enough money, and then they continue to just pump and invest into the business, not paying attention to the outflows. So either they're not paying attention to income, and they think that the income their business is making is perpetual and unlimited, or they're not paying attention to what's going out, and they just continue to blindly invest in the business. So my budgeting tip when it comes to business is to do it. You have to do it, and you have to do it on a regular basis and revisit it. So can anyone come off mute, or does anyone want to type in the chat and share with me a budgeting tip that they use for business when budgeting? Let me know. And we've got a full house today, so let's wake you guys up. Give me a budgeting tip that you use. Come off mute if your hands aren't free to type. Let me get a budgeting tip from the entrepreneurs. Give you guys a second. Excel.
Well, for me, I look at the cyclical nature of my business and always use a more pessimistic view more than an optimistic view
Precisely.
when doing the budget. So I have to make sure that I'm not overstating numbers. That's one thing.
Exactly. Yeah, on the income side especially, right? And that's kind of like a rule of thumb in finance. We often refer to that. You want to make sure you're not overstating your income, and it's better to overstate your expenses and to understate your income. Then you'll have like a more realistic projection of where your business stands. So thank you. I think that was Sandria, if I'm correct. Thank you for adding that. Yeah, perfect. Thank you. So Excel, QuickBooks. Okay, let me see. Oh yeah, there's quite a bit of us in here. I need another business tip. I'm sure we've got tons of entrepreneurs in here and we're here to take gems away. You guys let me know, what is a budgeting tip you use for bit? If you don't budget, tell me that too. If you don't budget, I also want to know. Let me know if you're not doing your business
Yeah.
budgeting, type in the chat. Yeah, go ahead.
It's Andrew. One of the I found it very hard to budget at first,
Yeah.
especially
Yeah.
when your business is running and you've got so many things and you're kind of doing everything.
Yep.
What I found is a good tool to assist is a lot of the banking have a lot of online tools that
Mm-hmm.
can help you to kind of see what your spend profile was in the previous month, the previous year, and you
Yep.
can kind of use that as the basis for your budgeting fairly quickly.
Exactly. Yep. Agreed. Agreed. Yeah. So thank you so much, Andrew. I really appreciate that. That was extremely insightful. The first half of what you said, which I think is really important, is that most business owners don't budget in the beginning. It is extremely difficult. It's not expected. A lot of the things that are difficult are the things that certain business owners do that end up separating them from the pack. So business and entrepreneurship isn't going to look like, I'll read that comment in a moment, Moy. um, Business and entrepreneurship isn't this idea that everything's going to go the way you want it to go and all the things that you have to do as an entrepreneur are going to be pleasurable and exciting and fun, right? No, there's huge chunks to that that are tedious, that are not desirable, and that are repelling, if anything. And one of the biggest parts of that are budgeting, right? No one wants to budget. We don't even want to budget personally, let alone to take on a business and then to have to budget that as well, right? However, it's probably the most critical part of business, and majority of entrepreneurs can reflect that the most drastic growth or change they begin to see in their business and their business's performance comes from budgeting, right? So we definitely want to make sure that it's a skill that we gain. Use softwares. If banking apps are too overwhelming for you, use softwares like Excel or download a budgeting app, download QuickBooks, right? As entrepreneurs, it's really important for us to not fall into the habit that the average person falls into, which is like, okay, this is tough. I can't do this. Okay. So we definitely want to move way past that. We're entrepreneurs, we're tough, we're strong, we're constantly learning. And we definitely want to make sure that we're employing budgeting into our business. Right. So a big part of being able to employ budgeting has to do with learning. It's not a skill. Being here is a really good start. Joining the BBPA's spaces, financial spaces for financial literacy are really important. You want to start by watching videos and that kind of stuff. Watch a QuickBooks video. If you download an app or if you use a software, they probably have a video. If you Google Excel tutorials on budgeting right now, there's going to be a video, right? So use these types of things, learn them, become more versed, become more comfortable with these skills, and then you'll notice how easy it becomes and less daunting to implement them into your business, right? So Moy said, when I first started out, I made the big mistake of using my personal bank account for business, and it was a disaster on all levels. So my budgeting tip would be to always have a separate account for your business. And that's a major budgeting tip. Thank you, Moy, for sharing that. Sometimes I won't lie to you guys, that to me is like entry level. Moy dropped a gem. Like if you have a business, even if you're a sole proprietor and your business is obviously under your own name for tax purposes, you still want to have a separate bank account, right? You don't want your personal transactions being mixed in with your business transactions. It doesn't only make business budgeting hard, it makes it impossible, right? So that's a really good tip. Okay. With that being said, we would say use a zero-based budgeting approach. So start from scratch each time. So every time you touch your budget sheet, you want to have a day that you think of. If it's the first that you use, which people use hypothetically, you're going to use a number that is based on, maybe you have yearly revenues, you divide that by 12. If you're a seasonal company or a cyclical company, you're going to want to be aware of your peak periods. Is it first quarter, third quarter, first and third, second quarter and fourth? These things are important, right? So to being able to budget first, you have to be aware of your revenues, the fours: revenue, expenses, assets, liabilities. Once those are our four main words, when we get out of here, all of you guys are going to be walking around. I know what an asset is. I know what a liability is. I know what revenue is. I know what expenses are. I know where to put them here, here, and here. That's what we want, right? Assets versus liabilities, expenses versus revenue. So a zero-based budgeting approach is about starting from scratch, knowing what your income is projected to be that month from the previous month, and then allocating that directly to your expenses or to business activities that you use to operate your business. So last week, we talked a lot about being able to link your expenses directly to your revenues, which is a very innovative way and effective and lucrative way to do business. So you want to be able to analyze your expenses so that you can see if these expenses are linked directly to a business revenue or not. If that was a hand raised, just go ahead and come off of mute. You can interrupt me at any time. So that basically means you shouldn't be buying like blue juice or something like that 4 times a week for your business if blue juice doesn't make your business money. And these are little analyzations that we could do, right? So with that being said, you also want to regularly review and adjust your budget. So your business evolves and your budget should evolve as well. So as your business grows, as my business grows, let's say I do consulting or something. Now there's a new app and it helps connect consultants to customers and it's called Bark. So now I'm going to sign up for that app, right? That's a platform that now I have an expense for. So I'm going to want to make sure when I'm doing my budgeting, revisiting my budgeting, I enter that in. Okay, I have this new platform. It helps me generate leads, generate customers, but it costs me $40 a month. Awesome. I linked it straight to my revenue, but I've got to record it as an expense and I've got to revisit my budget and make sure that I have costs to cover that. Okay. So Andrew said, making sure that you pay yourself as soon as possible, right? So this is important. In our previous sessions, even about personal finance, we definitely went into detail regarding this. You want to make sure that you pay yourself as soon as possible. And if you can correct me if I'm wrong, Andrew, that has to do with retention, right? Making sure that the business that you put everything into pays you and you have money to take back and to help generate more money for yourself, right?
Yeah.
So that's the exact, okay.
Correct.
Good, thank you. Juliet said, administration takes up a tremendous part of revenue to run and oversee the company. Yeah. I'm really glad you said this, Juliet. Hopefully you come off of mute today and participate for us too. But it goes without doubt that administration is a high expense. So not to you particularly, Juliet, but in general to all business owners, rule of thumb, which a lot of us again don't know, your administration expense should never be more than 15%. So we are kind of conditioned to note that the front end, because administration is the front end of a business, right? If I work in a real estate office, the admin is the greeter. If I go to a retail store, the administration is the front counter, the point of sales, cashing me out, right? So admin is the front end of a business. And we tend to think that because it's the front end that we should pump the most money into administrative costs. We shouldn't. So as a business owner, right now, if your administrative costs are up there 30%, because I'm sure that's probably what Juliet's referring to, administrative costs can be so expensive. 30% of your expenses, that kind of stuff? No. Right? And this, like I said, it's a common mistake. So that's why I kind of keep repeating. Now, yeah, give me a second, Juliet, there. And that's kind of why I keep repeating that in newfound business analysis, when it comes to success, is being able to analyze your expenses, even just your expenses on their own, and making sure that they correlate directly to revenue. The difficulty with administration expenses is that although they aid the operation of a business, they typically don't correlate directly to revenue. Go ahead, Juliet, for me there.
Blessed morning, everybody. I'm a little
Hello.
under the weather, so forgive me. Where I was getting at with this is because the different scope of business takes up, depending on what your business is and the stats that it comes under. For me, it's hospitality. And with hospitality, there's a tremendous amount of software. It's software driven because you have platform where you have to book in and reservation and when they get to the resort they have to have these different and amenities, and that's what people look for. But those are the things that takes up you said 15%, but I can tell you it's when you hear the price on these things, it's through the roof. And then you have to budget yourself accordingly to your revenue of what you're selling your services for. And you have to compete. And sometimes people think, well, why is it always so expensive? Well, we have to offset the cost of all these amenities that you're looking for to the revenue that we're going to generate to cover it.
Definitely.
Right? And it gets very, very deep. So that's just something, a caveat for people to know when they're going on vacation, when they get a price and it's like, why is this? And then food costs is through the roof right now. Right? Airline tickets are through the roof if you're going to marry a package deal, So for me, that's where that was coming from with administration, and those are the costs that you don't always get back 100%. You have to always take a dive with it,
Exactly.
Precisely. And then you have to be competing with others where with the peak period we're in seasons, right? So we have first quarter, whereas March break, you have a rush of anybody will come. Then you have the down season, which is primarily late summer, early fall. You know what I mean? And then it picks back up again. So all of those things you have to address and just adjust yourself accordingly for other revenues to come in and services that you sell along with the packages.
Yep, definitely. No, I definitely agree. And especially and yeah, Juliet, no, I know it could get up there to the 30 and the 40% of your expenses. Definitely not thinking that it's your revenue or your administrative costs are just gonna automatically fit that, 15% bracket. It's not gonna happen, right? But it's almost like the TDSR ratio, your total debt to service ratio. You might go to apply for a mortgage and they're going to look you, they're going to say, no, your TDSR is above 40%. We're not approving it. But what we have to do is we got to say, okay, but I really want that. And, as business owners, we really want profit. We want success. I want success for you. I love hearing about your business. I love the industry. Many people don't know the details, but I love it. I know you're in hospitality, you're in the holistic industry, and you're providing a natural and a very people-centered, community-centered ambiance. With that being said, it's costly. With the rise of technology, digitization, becoming a business owner, it's costly. It's more costly. And that's why I say definitely we want to practice this. It's something I practice with my regular clients, my clients that are business owners, which is that idea of directly connecting your expenses to your revenue. And we want to make sure that whether that is imposing a new booking platform, there's a plethora as well of very sophisticated professional executive level platforms. It's just more so about us sharing the information and getting access to some of those resources, but that we can use to just scale back on certain things. And I'm glad you brought that up, because that is the precise reason why financial statements and having this sector of things is so important. Because at the end of the day, if you don't have like some decent organization to the way you look at assets, liabilities, expenses, these administrative expenses, you're not going to have the chance to look back when someone says, hey, I know of this platform, it's free, my buddy just designed it, everyone's using it now, so on and so forth, whatever. You don't have anything to go back to and say, oh my gosh, before I was using this platform that was costing me that $200, let's go take that out and replace this, right? And you see how that just bumps up your profit, because now you're paying $0 when you used to have a monthly expense of like, I don't know, maybe 20K for that platform, depending on what your scale is of the industry, 20K, 2K, $200, wherever your business lies. So these are the kind of things that make being able to produce and interpret financial statements so important, because you cannot analyze alternatives otherwise, right? And as we know, a big part of business, we learn about cost of capital, we learn about opportunity costs, and we learn about analyzing alternatives. What is that all about? What's analyzing alternatives all about when it comes to business? That's the way to budget. The only way to budget is about analyzing alternatives. And I hope you guys take that as a key takeaway, both personally and business wise. That's what budgeting is all about. Analyzing alternatives. That's the real reason we budget. A lot of people suggest we budget to track and so on and so forth. And yeah, there are small psychological impacts of budgeting to track your spending and how it will help you be financially more responsible. But that's the least bit of it, right? Really, we budget to analyze alternatives. When you write things down, when you track what you spend money on, when you check in and see if your expenses do actually correspond with revenue, that's the only way that you'll be able to see if there's another option that's better, right? So definitely just little key point there for us. And remember, if you guys have any questions or anything, feel free, interrupt me or type in the chat. I'm monitoring the chat sometimes, but coming off of mute is just fine as well and continuing the conversation. So as we talked about last week as well a little bit, the cash flow is the lifeblood of your business. So how do you guys ensure a steady flow of cash in your business, or how have you overcome challenges in kind of maintaining cash flow in your business? So, and I want to know these things even from like those who are independent contractors, self-employed, incorporated proprietorship, no matter what the angle. How do you maintain a cash flow? Is that only from your sales and revenue generation? Does anyone here engage in investment activities in their business? Give me some insight on how you guys maintain cash flow in your business. I'll give you guys a second or two to answer. You can come off mute, engage with me. Let me know how you keep cash flow in your business. Is it straight revenue, product for sales? Whatever the case may be, how is everybody maintaining revenue in their business?
For me, this is Andrea. Sometimes I work because business is slow. And like you said, like for me right now, I'm also trying to learn some, like, because my business is more like service oriented. So thinking of other products and services that I could provide during those periods is what I'm doing. So yeah.
Definitely. Yeah. And what industry are you in?
I'm in the accounting industry, like yourself.
Oh, nice. Yeah, very lucrative industry.
So during like September, October, November, it's a slow period.
Of course.
So looking at what you could provide.
Yeah.
During those, what you do, maybe provide training, provide looking at financial counseling, things like that outside of the tax realm. So yeah, planning yourself in the period. I guess that's what I'm thinking. Yeah.
No, I totally get that. Especially for Black women coming into the STEM industry. So that's science, tech, engineering, and mathematics. So accounting and finance obviously covers the math portion. It is very difficult, especially because socially we're quite ostracized, meaning that we don't have a high social position, but we end up being highly skilled, right? So we're really good at this stuff, but then the disconnect is the marketing piece. Definitely, like I said, you're in the right place. And not to get into too much detail, but definitely probably just the marketing piece, right? So a main part of that, obviously, if you're an accountant, you have kind of like the budgeting, the budgeting and the financial management skills probably. But the main thing about that is going to be, okay, during your peak periods, you want to kind of figure out how you can retain some of that profit to allocate directly towards marketing. But because marketing is such like a new and like a weird kind of field, you got like the phonies and then you got the real deal going on. You want to be careful about how you choose to do that. But like I said, we could get more specific, maybe post the webinar, but you want to try different marketing tactics for different things. So I heard you mention alternate revenue streams. That's exactly what I would suggest. And then this also goes out to anyone else who's in this kind of industry, financial consulting, anything where you're kind of taking appointments, client facing industry. I know there's a few of you guys in here. Focus on marketing, focus on consulting, focusing on teaching and the education piece. So a lot of the time, you know, like if you're accountant, the need during tax season is for people to file taxes, but then you have like the whole rest of the year that's happening that's kind of downtime because it's a cyclical industry. Same thing with my finance people, same thing with even my marketing people and a lot of my people in the business, the 4 pillars of business. During that time, you want to sell your knowledge. So that's probably my key thing. Suggestion I would make to you when it comes to that without getting too into everything is that definitely to maintain cash flow, you want to sell your knowledge. So that could be into like monetizing online classes, hosting workshops or something like that. And you'll be quite surprised. Don't rely on yourself. Don't rely on word of mouth. Don't rely on friends and family. Get onto these platforms, pay your money, get them to promote your stuff, put on events and stuff like that, and collect money, ticket sales, workshops, clients, so on and so forth. So that would probably be my little piece for anyone in that industry. Okay, so we can move along. Was that helpful for you, Sandria? I hope that was helpful for you. You're still there. You'll let me know. You can come off mute if you want. Hopefully that was helpful.
Yes, that was helpful. Thank you.
Okay. Okay, great. Good.
Yes, thank you.
Awesome. So we also want to negotiate favorable payment terms. So negotiation is something that also even came up in our last series of seminars and sessions and that kind of stuff. I realized at that time as well that many of us don't know like the ability we have to negotiate. So let's say, for example, you're going for, and this is on a personal level, you're going for a financial product, a mortgage, a loan, something like that. The bank says to you, oh, okay, you know, we're going to do 17.99%. And you're kind of like, damn, that's bad, but I'll take it because the bank said that's what my interest rate is. So these are things that also make budgeting extremely, extremely important is if you understand the value of negotiation, right? And that comes to personal and it comes to business, and it's more critical in business, less in the personal world and even more in business where you can negotiate terms if you have N30, these type of things. So if you guys are not familiar with that kind of stuff, when you're buying things from suppliers wholesale, typically they'll give you maybe a discount period. So if you pay before 10 days, maybe you're viable for a 5% discount off of the cost of all your products. Even if it's money, the cost of money, like I said, debts and that kind of stuff, these things are negotiable. So understanding your financial statements and financial position also help you to be in a position of leverage when negotiating terms for other financial products. And that could be partnerships, that could be loans, that could be suppliers, anything like that. If you know where your business stands financially, a lot of people, their business is even in a really good position and they just don't know. They don't have everything recorded. They don't see that, wow, this is pretty good. This, you know, business has high revenue generation. Their expenses are low. So the cost of doing business is low. You know, they've got, I don't know, a few shirt press machines and, you know, so a couple assets and stuff. And really, they don't have many liabilities. They've never taken out a loan. If you know that your company's in that type of position, and you think about it and you have things on paper, you've got leverage, right? So this way, recording your financial history, analyzing your financial statements puts you in a position to be able to use that leverage when you're going to the bank, when you're asking suppliers for better terms, that kind of stuff. Does that make sense to everybody? I know that that might also be really, really, really critical to Juliet. As she mentioned, she's in the hospitality industry. Awesome. Perfect. So for those of you maybe in hospitality or in retail or anything where you're buying items in bulk and then selling them, so product based, you definitely want to make sure that you have that skill and you have your financial statements and you're aware of financial position. That's what it's about. Knowing and analyzing, being able to interpret financial statements is about being aware of your company's financial position. And then once you have that, when you're in industries, hospitality, retail, any sort of product sales driven type of industry, then you'll have the ability to negotiate terms, right? So the cost of your money, cost of your loans, and terms with suppliers. So hopefully that makes Moise at 100%. So I'm happy that that makes sense. Okay, good. So we're going to move on a little bit. How are we for time? Okay, good. So entrepreneurship is inherently about managing risk. So now we're talking about navigating risk, right? So can someone provide an example of a business risk? Someone give me an example of a business risk that you maybe have had to take, that you've had to analyze. What is something you could think about when you think of business risk? What comes to mind? Give me some ideas. You could come off of mute. You could type in the chat. Let me know. What comes to mind when you think of business risk? What is business risk? Guys, let me know.
Hiring too many employees. This is Najee from Harmony. Hiring too many employees and not having the, in the effort to try to excel your company, but not having the revenues to cover, and pending or waiting on funding or waiting on sales to compensate their salaries. I mean,
exactly.
That's like,
yeah, no, I definitely agree. It's Naja, right? Am I saying your name correctly?
Najee.
Najee. Sorry about that, Najee. Okay, thank you so much for that. I think that's really, really, really important, especially for those of us, and not everyone. Some of us are sole proprietors, maybe independent, but for those of us who are maybe operating more of a corporate style business, and we have employees or we have payroll, we have wages to deal with, wage expense, that was a key gem, right? You don't want to, just because you have work for people to do, if you don't have the money to pay them, you definitely don't want to take that on. And that's a good example of business risk. And it's a common example of employers. And it will drive your company kind of to the floor, because it not only messes with revenue, but it also messes with reputation as an employer, right? So thank you so much, Najee, for sharing that with us. That is a really good example of business risk. So it's payroll, that's payroll risk or wage risk, right? You're taking on more employees than you have revenue to pay out. And that often happens. What we do as employers is we say, what exactly, and then Moy just mentioned, then you end up having to pay your staff, right, out of your personal expense, so your personal income. And what we do as employers is, when we see there's lots of work to do, we automatically assume that we can just connect that. And again, going back to directly connecting expenses to revenue, we think that if we take on the expense of an employee, it's automatically going to take care of the revenue piece. But there's probably 10 other reasons, just besides not having the manpower, why you're not generating the revenue to support that manpower. So it's kind of one of those things. If you need 6 employees to make 100K for the month, let's say, right? And you've got those 6 employees, but you're not making 100K, the problem goes beyond money, right? So even if you were to get a subsidy or something like that to pay, you've got deeper issues. So instead of just resorting quick to, okay, this problem can be quickly solved by hiring more employees, we want to find out why, based on analysis, these 6 employees should be making the company 100K. Why is that not happening, right? Definitely. So Juliet said, mortgaging your house for contribution to the business. Is that a question, Juliet? Come off mute. Tell me more about that. Is that a question, or is that like a risk, or which one is that?
It's more a risk.
Risk.
Again, depending on the category of business that you're in, you go to the bank to get financing, and they want you to be able to put in X amount from your own pocket to stand certain risk as well, than them just taking on the full risk factor. And then and it's always if things don't work out. That's the big thing with the banks. If it does not work out, how are you going to pay it back? So they want to know that you're serious about it, taking the risk by mortgaging your house to
Definitely.
put in your percentage in there. So for you to do that, they look at it and said, well, okay, he or she is serious about this. And then let's see what we can do to help. They might not give you the amount that you're looking for, but they're going to match what they have. And
precisely.
Yeah. So that's what I was getting at in regards to, that's an asset. That's a personal asset, right?
Personal asset. Yeah.
Right.
Okay. So now I get it as a risk. Yeah, totally. And that's a really good example, just showing us that possibility when you're putting up personal collateral in attempt to gain some sort of business leverage. That is definitely a strong example of a business risk. So thank you for that. Andrew, is that you? I see you're off mute. Are you sharing something with us?
Yeah, that is that's a big risk because especially when
Yeah,
companies start out, when you even when you incorporate and you know your business is growing, your the banks will always want a personal guarantee even
100.
though you're incorporated. So,
Yeah,
you know, one of the biggest issues is the lines of credit that has to be managed very carefully. Because if an industry or a sector doesn't do well, then the bank tends to want to call those lines of credit, and that could
yeah.
really impact a small business significantly. So that's a huge risk with those personal securities and lines of credit.
100%. And I'm so glad that this is actually coming up. Thank you guys for those contributions. One of the things I try to earn business owners, specifically, business owners attempting to evade marginalization. Behind me, you guys see Noir. That's TSK Wealth's mastermind group for entrepreneurs that come from marginalized backgrounds. That could be Black, that could be LGBTQ, could be women, it could be men, anything, whatever makes you that way. But those of us that are kind of dodging that marginalization, it's Noir's a mastermind group for that. And one of the most critical things that I beat on the heads of entrepreneurs from marginalized communities is one of the things that kind of keeps us in that cycle, even though we're such good conductors of business, right? Whether that's East Asian, whether that's African, whether that is Southern American, whatever the case may be, we're great conductors of business. We're kind of in this cycle of poverty, but it's because we use our own money and our own leverage and our own capital to start these businesses, right? When you look from like a banking side or a lender side, it's kind of like, hell no, you're not just going to go open up this entity, right? And I'm just going to give you $100,000 because you had a bright idea. There's so many other facets to a decision like that. So, with that being said, what I urge business owners or entrepreneurs to do, and it's never too late, slow down for a second, take a halt, and look for funding, right? Start yourself off somewhere, look for some funding. This ties directly into the next topic I'm getting into. So, I'll just go straight into it, which is you want to make sure that you have diversity in revenue streams. If anybody in here knows anything about personal finance, personal investing, personal financial management, right? Diversity, diversity, diversity. When we get into business, we typically get into business thinking, oh, I'm really passionate about this thing. So if I just be perfect or if I be really good at this thing, then my business is going to be successful. It's not about that. If you have, as I mentioned before, a cyclical business, if you have business that's periodical, even if you have a business that is year round lucrative, you're still going to need diversity in revenue streams. And what does that diversity look like? It looks like maybe you have a grant writer or something that also applies to government funding so that your business can constantly be taking advantage of funding and grants that are available, right? There's softwares for that. There's people, I'm a grant writer myself. I don't try to hire me right now, but there's people for everything. So you want to, and that's a way, if you have the expense of having like a grant writer or somebody who's applying to government funding for you, you can collect that or connect that, sorry, directly to a revenue stream or an income stream for your business. So these are kind of the innovative ways to get thinking. Last week I gave out a few gems, but these are activities that kind of, when you studied what I studied, you learn at like a vast pace. I could sit here and give you guys lists of different options, but you want to buy things, put a vending machine in your business, buy an ATM, put it in a different cash-based business. These are cash flow activities, revenue generating activities that as business owners, sometimes we're so focused on just being skilled and being the best at being in our industry, whatever that industry is, and we don't focus enough on making money, especially from our communities, Black communities, other marginalized communities. Our priority is, oh, I'm passionate about this, I'm conducting business, that's great. That is not how the economy works, right? We have to have diversity in income streams. You want to have somebody apply. To be honest with you, I work pretty closely with my accountant. They're from a different culture, right? They come from an Indian background. We work really closely. I see him maybe 2 times a week. And we have kind of like a third party deal. And he sends me like all his clients that are business owners. that think that their accountant should be giving them updates on grants. Again, that's for you, Sandria, another service you could offer, right? Their clients, accounting wise, are looking for them to say, hey, what grants are available right now? So they kind of forward that to me and then I deal with it, right? With that being said, majority of business owners that are successful, that are lucrative, that are keeping their books, and they're taking advantage of these incentives, whether it's tax incentives, grant incentives, it is a whole revenue stream for majority of lucrative business owners. So if you're in this, meet right now and you've got a business and one of your revenue streams is not grants or government funding, you need to add that to your book. So that's a major giveaway right there. In addition to diversity, as I said, participate in investing activities as a business owner. If someone wants to speak, go ahead. Sandria, is that you?
No.
Okay, you're good. Sorry. Okay, no, it's okay. Yeah. So you definitely want to add to your revenue streams and not only just be isolated or secluded or closed off to just the one revenue stream, which is if it's product, your product, if it's a service, just that service, or whatever the case may be, right? So that's the main thing, diversity in revenue streams, accessing, tapping into different sources of funding. And if you're a new entrepreneur, before you even start pouring your own resources into your business, seek out funding. That's the main thing. Funding is going to help you acquire assets. Assets are going to give you banking leverage. If I go to the bank, then I say to them, hey, I need a loan, but my business has like a $1.2 million insurance policy and we've got 2 ATMs. They produce $1,600 a month together. All of that. They're like, oh, shoot, forget. They're not even focused on the fact that maybe, I don't know, I do nails or something like that. They're like, damn, she has some assets. We've got this. We've got a bit of collateral. That's what's going to be able to get my business a loan or some funding or an opportunity without me having to personally guarantee it. So these are just steps that we all might know, but we're kind of just doing them in the wrong order. So we could go out and acquire business assets before looking for funding, and that will mitigate, we're talking about risk, that will mitigate us having to offer up or be open to that risk of personal assurances when it comes to the cost of money. Awesome. Thank you so much. Okay, so we're going to move on. Tools of financial mastery. So financial tools can be a transformative game changer. Does anyone have, and we asked this question last week, does anyone have a favorite financial tool or software that you guys use in your business, whether it's for analysis, budgeting, forecasting, could be AI assistant, virtual assistant, these kind of things. What do you guys use? What kind of tools do you use in your business to kind of automate things or make things easier for you besides people and besides manpower? What kind of tools do we use? You guys can let me know. You can drop it in the chat. Auto entry. Andrew, what is that? What's auto entry? Tell us about that.
Yeah, that's a tool for my receipts. I don't enter receipts manually. I just scan them, take a picture of them, and it's uploaded directly into an accounting system. So it kind of eases the administrative part and allows for more analysis once it's in once it's on the platform.
Exactly, yeah. And can you connect that to your QuickBooks or?
Yes, it's connected directly to it's Sage or QuickBooks. You can connect it directly to either or.
Nice. That sounds amazing. That sounds like I'm probably going to take that for myself. That sounds great. Thank you for that. And then Juliet said QuickBooks and Maestro. Maestro, is that correct? PMS. Juliet, you want to come off mute and tell me about that?
Yeah, Maestro PMS is the business tool we use for booking, reservations, purchasing, everything you can think of. And it's also CMS. It's also a CMS as well. But here's another thing. Andrew, I like that auto entry. And if you could just drop it in who's the maker of it and what kind of cost are we looking for that?
Yeah. It's very affordable for small business. Yeah.
Okay, that's great. Yeah, because we use a lot of receipts. There's, ton of receipts. And I to cut down the cost of my accounting, I manually do it myself.
Yeah.
Right?
Yeah,
Yes.
no, I was there.
Yes. Right. So that would be great in regards to
Yeah.
that. Yeah. So that's what Maestro PMS is. In the hospitality industry, that's a lot of them uses that, but it's not cheap.
Exactly. Okay. And we get that. Thank you for sharing that. I definitely noticed exactly between you and Andrew as well, right? Depending on the industry you're into, you have to know what tools are going to be most useful or most lucrative to your business. If you're product driven, maybe Paulette said Wave is a good one. You can scan your receipts and it will upload to the system. So when you're in an industry where you have lots of expenses and that kind of stuff, you're definitely going to want to focus more energy into making sure you have apps and softwares that can assist you with data entry. Otherwise, you're going to spend a lot of money on manpower for that data entry when it's something that you can automate, right? So this is where we kind of, and Paulette said it's also really affordable. This is, again, where we get into the idea that financial statement analysis is necessary in order to what? What was the key? Analyze alternatives. So now when you're in a situation, let's say Juliet, clearly she views and pays some sort of decent attention to her financial statements. So when Andrew now brought up something, a system or a software that could be beneficial to her, immediately she was able to see what that could replace. So that was a good example of why staying appraised and being up to date or being aware of your financial status, your company's financial health, and financial statement analysis is kind of critical, really, to being able to capitalize on opportunities for your business and analyze those alternatives, right? I know we were in here last session, and there is Happily AI is a good at finding grants for your business. If you need like a grant sheet or something of that sort of document, I can get TSK Wealth can get something like that over to you guys as well. But let's take a step back for a second. So we just finished talking about risk, and we're talking about risk. We're talking about tools to navigate and mitigate risk, and also tools to conduct business, tools for budgeting, etc. Stephanie also just let us know that Happily AI is Black owned as well. So thank you for that. So we could be doing some Black B2B, right? So as I was going to ask you guys, are you guys aware of external risk? What is external risk that affects your business? Yeah, Inuit Najee is right. Inuit's great. Inuit's a great resource. And also too, it's worth, I say Inuit or Inuit slash QuickBooks is worth the expense just from one professional to another, because it's accredited as well. And you can't replace that. So for some, that has to do with opportunity costs. Just being a financial person, I also weigh that out too. I could use maybe a cheaper quick platform than QuickBooks or a cheaper software than QuickBooks. However, it's accredited. So that means like it has a good relationship with the banks, has a good relationship with the government, and it liaisons that way. And there's a cost you can put on that because that costs extra effort in itself now to have to navigate that as well, as opposed to using a company or using a software that already has that relationship and that strength with the major institutions that we all have to do business with. So I definitely advocate for QuickBooks. But they did not pay for that message. But yeah, so QuickBooks is a strong one. But yeah, you guys tell me a little bit about what some external risk factors are. And this is going to be kind of our last little insight to wrap things up because I feel like the gems typically come from here. This is to give you guys the opportunity to ask some individualized questions or get some individualized insight, which is in regards to what you feel like your industry threats might be, or the things that are in the way in your industry. Let me know what some of those things are. Your external risks, what do those look like? So let's say I'm in the financial industry. One of my big external risks is the economy. So the economy affects everybody, but I mean immediately. Like a change in anything that might affect securities or the markets is going to affect my industry drastically. Anything that has to do with the economy and has to do with people feeling financial security. So, not from my perspective, but from the consumer's perspective, anything government wise, which is who they trust, that might upset financial stability is going to have an effect on my industry. So that's like an external factor outside my business that's going to affect my business. Can any of you guys tell me an external factor that might affect your business? Let me know.
I would say at one point, I would say that the economy would have impacted because of COVID and also the high cost of rising cost of uh, services that is attached to traveling and all that. But for some reason, people are they want to get away. They don't
Yeah,
care. They want to go somewhere where they can just clear their mind because what I also find in the after doing the research and development with the I mean, we go so deep into the Gen Zs and the Gen Z from everywhere to find out which one is really traveling and how their views are in regards to what they're looking for in traveling. Traveling is not
precisely.
about, yeah, traveling is not about going somewhere and say, oh, I've been there and oh, it was nice there. Traveling now for a lot of the gens is rejuvenation, their mind, body, and soul, because and that's where we come in the holistic spiritual atmosphere, right? Where they can
Yeah,
make sense of nonsense in
of
essence,
course. Of
right?
course.
And what we find is that that's what they're looking for. They're gravitating to that, the
Yeah.
different generations, because the atmosphere is not inclusive of alcohol where it messes with your mind. We cut that
Mm-hmm.
out. We cut that out,
Mm-hmm.
period. So it's a form of literal atmospheric change.
Detox. Yeah, I get
Yes.
that. I
Yeah,
get
and
that.
that makes a major difference for people. We didn't even know. We just did a survey by just opening the line, the booking agent on our website, and we had to close it down because people were just crazily booking.
Yeah.
And
Yeah.
that's when we realized how important this is.
Yeah, yeah, definitely. Definitely, I would say, yeah, the economy, the cyclical activity of the economy is definitely affecting your industry. But I also find it quite interesting, and I see you, Laura, will take you. I also find it extremely interesting that you said some might think, COVID pandemic tougher, but it's interesting that you perceive that as such a business opportunity. Because I thought that myself. I thought people are trying to get away, right? Evade the reality that we're kind of living in. So it is a good opportunity for those in the hospitality and tourism industry. All you have to do is find a gap, find a need, right? So you kind of found that niche. People are looking to detox, looking for a different ambiance, a different experience. And then you capitalized on that. So you definitely use those external factors and external market changes to uplift your business. So I love that. Laura, you had a hand raised. Did you wanna jump in? Laura, you can go ahead there and take yourself off mute if you want.
Yeah, sure. Hi,
Hi,
everyone.
how are you?
Good, good. Enjoying the conversation. Um,
Awesome.
this is great. So for me, I'm in a kind of a niche market. I do beekeeping. So my biggest, uh, I would say, challenge is more climate related.
Yes.
So like just pattern changes in the climate affecting the bee habitats and the
Hmm.
flowering season. So it all kind of really does affect their availability of them having nectar to make honey. So
Of
it's
course.
very unpredictable.
Hmm.
It's weather, right? So
Yeah, exactly. What control do we have? Okay, yeah. I love that for you, by the way.
thank
I
you.
love that industry for you. I definitely, just personally speaking, of course, right? Climate's going to affect you. That's the thing, being in agriculture, being in anything that has to do with like environment, agriculture, that kind of stuff. The climate's going to be your biggest thing. What I would say, especially in terms of like diversity and stuff, this kind of just goes back up to what we were talking about. You could mitigate a lot of your risk through diversification. Like even you telling me that just like right now, um, let me rewind a little bit. Typically when I talk about business, I let everyone know it's really important for you to know how other people perceive you. So even just like how you told me that and just so calmly because it's what you do, I'm sitting here and probably 90% of the gallery is like, what? right? That is amazing. So even just you knowing that is like, that's an opportunity to capitalize on. You know what I mean? You could have like, this is just the stuff because I'm a business strategist by trade. These are just the specific things that come to mind. Write a children's book, put it on Amazon. That's a passive revenue stream, right? You come up with, you've got a whole audience of people. Like I would sit down and I'd be willing to watch like a 90-minute video about what you do. I would. So, right.
Okay.
Like these are just like, quick things you could just back your head because there's AI now. So if you get AI to write you a quick book, you put your edits and your final little touch on it, put a picture of the author, write a bit about yourself, put it on Amazon, passive revenue. Just the things that make us interesting that we don't put effort into doing. And that is a key. Like it might seem like informal advice. It's very formal advice because we learn this in business. You find just little things that expand exactly workshops. Like I know right now, I can think right now of a contracting opportunity for like, just off the top. But obviously it's your business, it's you, it's your life, but you just want to try to find a few things you could do to branch off that you don't have to put much effort in. So that's kind of like, they say hard work beats talent when talent doesn't work hard. Sometimes we use our talents so that we don't have to work hard. So, that is an amazing, super outstanding, super unique part of you. Take it, attach to your business, monetize it. Yeah. And there's tons of grants for you. There's so many grants and so much funding for you. So there's lots. Yeah. So connect me on that and I'll send you some stuff. But yeah.
Definitely will. Sure. Thank you for that. Okay, sweetie.
Yeah. Awesome. Okay, let me read some of these comments as well. Andrew, I saw this one. And what are we, 11:16? Okay, we will wrap up shortly, but I will address these comments. So Andrew, new technology, right? I saw that and I smiled because definitely the introduction of technological development and digitization is a threat, right, to a lot of entrepreneurs. It's less of a threat to the big boomers in business because they kind of have their branding and their niche established, and they probably wouldn't look to just automatically sub out like a big part of their operations or their success with something automated or AI. But it's a huge threat to the small business owners because it's automatically it's taking away a unique aspect for us and the innovative aspect and allowing for multiple people to be able to do the same thing, right? So new technology becomes a threat in that way, but that's a little bit more of a negative. I know that there's some plus sides to that. So Andrew, elaborate for us on that a bit. New technology, how is that? Like, is it a negative external? How is it?
I think when I listen to all the different types of businesses on this call, a lot of have already kind of overcome that because we've been very niche driven, very specialized, which is not amenable to a technology solution. But if you're in a service business that can be replaced, I mean, one of the service businesses that's being affected now is your industry, the financial services industry. There's a lot of AI technology that's being developed to have virtual financial assistance. But in my industry, which is home care, we do provide a very specialized service. We do send caregivers and nurses and other healthcare professionals to families in the home, but at a premium. So technology is such that you can match caregivers and families together fairly easily using a platform, as opposed to having an intermediary like an agency like mine. So that's one of the major threats that we see that we're mitigating. But in general, most service business are, that are kind of generic are a threat if they haven't kind of thought through what the technological overcoming factors.
Yeah, exactly. And I mean, I could state this, but I want you to tell everybody right now, what are some of the things that we need to do in the service industry? Because I like that you brought that up. It's something that we definitely are constantly circling the topic of the idea of the introduction of AI to the financial services industry. What are the stuff that we are doing to mitigate that risk? I would love for you to share. What are we doing? So you mentioned you're in home care, and I'm sure you, as you said, you're aware of those external threats.
Yeah.
How are you individualizing and customizing your business to stay competitive?
Yeah, so that's a good question. What we've done is we saw this problem developing over the last 5 years. So what we've done is we've developed our own platform as an add-on, and you'd mentioned the among other streams of business. So an add-on to our business is for those folks who cannot afford our services directly. We've developed a platform that they can connect directly with a caregiver that's certified and background checked, and then they can do business with the caregiver directly, and we get a percentage on that. So that is a part of our business that kind of mitigates the growing trend of technology.
Yeah.
But and then also, using those AI tools
As
more
well.
in our business. It's the tools are becoming easier to use, and it's just using ChatGPT for very basic, writing some ads,
Yeah.
very powerful tool. So
Yeah.
we've started using that as part of our way of operating.
Precisely. And I love what you just said there. And I think we're going to do announcements at the end, and I'm going to give you guys the key insights. But I'm going to end on that note that you just mentioned. Like, if you can't beat them, join them. And that's where that saying came from. If you see that someone else is doing something that can substitute your product, you need to add that substitute to your business. And I think that's like the gem of the day. It's excellent financial advice. It's almost how we manage our own personal portfolios, right? If I've got 10 companies in my portfolio and I see tomorrow that companies 11 and 12 are doing well, I'm not going to replace it or take away my product to add 11 and 12. I'm just adding 11 and 12, right? So so you want to make sure that you're capable of doing that within your business, and that you're open to doing that as entrepreneurs as well. When I see new technologies and that kind of stuff come out, we emerge. That's what we call as business owners, you stick and move, right? So let's say I'm in finance and I have a consulting business, and AI is really starting to come in and give people personal advice through technology. I got to add that facet to my business. So similarly, Andrew stated, he's in home care, and there's a lot of technologies now that can just come in really quick and virtually just connect service provider or care provider with client. So he's got to kind of add that facet to his business, so that for those who don't want to do a face-to-face and in person, they don't have to leave the company to get a different service. They could stay with the company and still access that other service, right? Because who wants to go from TD to RBC just for one product, right? You want TD to bring you that product at TD. So just a little gem, food for thought. Okay, so I'll give you guys the insights now. So as we wrap up today's session, we'll just reflect on the key takeaways. So key takeaway number one, we've got financial literacy as the guiding entrepreneur's guiding light. So just understanding that you need to understand finance, understand financial literacy and all that kind of stuff. Number two, the intricate dance with the financial ecosystem. So we went through that last week. And then the understanding of financial statements. So being able to navigate, understand, interpret, and produce financial statements. And then obviously nurturing the financial health of your business through cash flow management and risk mitigation, which we talked a lot about at the end. We can wrap up by asking you guys, what's one thing you found particularly valuable about today, or that you learned in exploration today? You guys could share with me a business you wanna check in with or connect with. Give me some valuable. What did you learn today? What were some valuable insights or gems for you guys today on the call? You can let me know. Workshops, companies, hi Chanelle. Yeah, no problem. What else you do your business? You guys can let me know. Text, type, or come off of mute. Something valuable that you learned today, whether it's about risk mitigation, financial statements, your business. Give me something valuable you guys left with today. Resource, anything. I hope you didn't leave with nothing. Give me something valuable you guys learned today. Sorry, there's comments. My mistake. So Moy says acquiring business assets before seeking loans. That's a great one. I said that was really important. Yeah, try to acquire assets in your business before seeking loans. Acquire assets, loan funding. Yeah. Analyzing alternatives. Exactly. Yeah. Yeah. Diversity is valuable. Yep. Exactly. There's money in diversity. That's where it is all at. Diversity, alternatives, a mix. That's where the money is at. Seek. Period. Yeah. That's it. Go looking for the things that you need. Yeah. Exploring revenue generation opportunities. Yep. The significance of budgeting when starting a business. Yeah. Seeking grants and wow. Wow. You guys came away with like the best key takeaways ever. Diversity is valuable. Analyze your alternatives. Go out and seek what you want. Get assets before you start a business. Get funding before you start a business. Make sure you're budgeting right from the beginning and seek out grants and government funding, free money, right? Amazing. So thank you guys.